let us do the market review today of this current week. So I think I mentioned previously in my newsletters also that we are in no trade zone from last 1 month. That's first thing, and second thing is that this is a news driven market, so you have to be very much cautious before taking any trades, because there is a lot of volatility in intraday as well. And unless index crosses above moving averages, it's better to sit out with 100% cash. And apart from that, if you want to take, you can take intraday trades with a small risk. So that's the overall current market structure. So let us deep dive into index. Let's go to the Nifty index. And I clearly mentioned that in my previous newsletters also that we have the very bad gap down resistance. Like this is a gap one resistance around 25,000, and again around 24,500 we have one more gap, and third gap is formed recently around 23,400 above. So first thing, as a technical analysis, that we focus on price and volume irrespective of the noise around us. So as per my chart, we have to clear out the at least first gap 3 resistance of 23,400 clearly on a closing level. Then only we can start taking our test positions trades, and then if we get good feedback on our trades, we can take the further trades. So till then, it's better to sit out completely in the market, or else you can short the market every sell on rise. I think I clearly mentioned in my previous newsletters also, any bounce in market, you have to clearly make it as a sell. Every bounce should be sold instead of buying it out. So you can see whenever Nifty try to attempt this zone, it's clearly rejecting from this level. That means, as I told, it's clearly sell on rise market now. So now though we don't have any opportunity to sell also, let's wait for some more days, at least let it bounce back, and then we can short near the resistance level. So in fact I shorted on 27th. In fact I tweeted also that day. Let me show you my tweet, just a moment. So I'll just take you to my current week trades. Let me take you to the around. Okay, let me. I think this week I took only trades. Intraday I took trade of TD Power on 25th of March. So this was my trade actually. I took in the market. It was a tight stop loss since market is very weak. So I'm taking very light position with the tight stop loss. So I took TD Power around 879. I kept initially stop loss as 866. So once it moved in my favor, I moved my stop loss. Let me take you to that. Let me show you that. So yeah. So but unfortunately it did my stop loss. I think I posted. Let me check that. I think I posted actually on same day that it did my stop loss also. If not, I think I have to update it out. That's when actually I doubled up my position around this zone, 222. But again, it came toward my cost price again, so I exited actually. Sorry, not this TD Power. I think I forgot to update in Twitter, but anyway, it might stop loss. Not stop loss towards my cost during my closing day, so it was my no profit, no loss. Again, I took the on Friday. I took on Friday 27th yesterday. So this was my intraday trade. I told clearly sell on no rise market. So when we got this 2-day bounce, I was waiting definitely to break this zone of 23,043. So it was gapped on actually. So I took my trade a little bit early, and then I doubled up my positions in my intraday time frame. So I was waiting for pullback to double up my position. So I doubled up, and then I waited till 310. I exited at exactly 310 completely. So since I don't want to take any carry forward trades because of weekends, and then lot of volatility, because of news driven market. So that's why I closed it up. But anyway, as of now it's still weak, so don't take any trades unless we get some bounce. Then only we can trade. In fact, I was surprisingly that day, I don't know, some news or something. Bank Nifty was very much weak compared to the Nifty, and again Bank Nifty also clearly a lot of gaps also. And clearly I am making these notes in my newsletters also that be cautious every unless this gap is cleared. In technicals, this gap will act as a clear resistance. So unless this is cleared out, unless this is filled completely, it's better to sit idle even in Bank Nifty also. And similarly, even if you notice, you can see the the small cap also trading near the channel. So again, this is also very much weak. Earlier itself this was very much weak. and I think any moment we might get one more gap down also in small cap. Mid cap also same story. I think I told in previous market review also that we already broken this weekly structure also, so it is very weak now. Again, it will try to go towards its resistance. Again, it will definitely sell on rise. Unless we got a decisive close above this level, it's better to ignore. So overall market trend is clearly very weak. In fact, like a week in the sense, let's say we take three trades. I mean, let's say we take five trades. Obviously, 3 to 4 trades will definitely hit your stop loss. Again, if you're making profit in fifth trade, that has to be more than 3 to 4 hour. And ideally, it's not possible in this market because of volatility is very much peak, and that's the reason I'm keeping very much tight stop loss even if I'm trading. So it's better if you're not professional trader, if you're working professional, kindly ignore this market unless we got clear trend, unless this all news get settled down. It's better to ignore. And apart from this, I have two crucial macro parameters. That is, one is UK, I mean the Brent crude oil. I'm expecting this to trade at least below this 90 to 93. Then only I think we can expect some positive in the equity markets. And apart from that, if you see USD INR, it's like getting. I think anytime we might go to 97 level, also 95, 97 level. But ideally, this should cool definitely cool down below 90. Unless this comes this 90 below 90, it's better not to see Indian market, Nifty or Bank Nifty. So once we get the below 90 in USD INR and then crude below 90 or 100, then only it's we better focus on the Indian markets. Till then, please don't don't lose hard-earned money. Try to save your capital. So if anyone is active in market, they can do intraday by index. But again, unless it's clearly sell on rise, then only I do. If not, please stay away from market. So this is overall, and that's the reason I'm not making continuous video this week also, because I know market is very big. What else you want me to do the video? In the sense, I don't have anything to showcase you. Unless I have this few setups, then only I can show you. But to trade, we need a good market environment, right? In this environment, it's we have to save the capital, not to make money. So that's the market overall. And currently there are some few setups, like it's doing well, but again, it's out of, like 100 stock, like one or two is doing good, like Jain Rico. I have this position, but very small position, so anyway it's very small, so doesn't even impact on my portfolio, so I'm holding this. Apart from this, I don't have anything else, and because of weak market. So in fact, for all my long term investors, you have very good opportunity to buy in Nifty Bs or else mid cap 150 Bs. I would prefer to buy below 20. I think I explained in the previous session also that whenever the market falls below 20% of percentage of stocks 200 below 20%, we can start buying in tranches like 30% or 20%. So because hardly 5 times or 6 times in close to 6 years, we this zone has been come now. So that's the reason I'm telling you, anything you can buy, start accumulating for long-term investors. Not stocks like Nifty base or mid-cap base in tranches. You can buy 30% now or 20%. So once the reversal bottom out happens, then you can buy the remaining 20%. So and you can keep pyramiding out. So or else if it falls another, like 1,000 2,000 points, you can still add it, since it's a base. It's a diversified mid cap and then Nifty base. So not like stocks wise. So that's the overall trend of the market. In fact, from February itself, market is very weak. So if anyone is losing in this market, please do not blame the market. Blame yourself that when the market structure is weak and you're still playing with aggressively, and even if the positions are not working, still you are wanted to make money. This is not the case. This is the art truth of trading, and then trading. So that's the overall weekly analysis. So probably I'll try to do another weekly analysis in midweek, and I'll be writing a newsletters today evening. Let's see. So if you want to take my gold view, to be frank, I'm expecting further fall from in gold. In fact, I tweeted also gold. Let me open that chart gold. I tweeted also long back. I mean, I think 2 weeks back, if I'm not wrong, that party is over in gold. So yeah, this was my gold view. This is March 19th. Just look at the. I mean, looks like the party is over in the gold. It might be time to exit the long term holdings. So this was the gold when I tweeted, but currently you see it's clearly like vertical follow close to. So let it form some consolidation. I think it will fall from here. I don't expect further rise in gold. Silver, the same story. Silver has been very much volatile. Look at this trade range. It's like 44%. Oh my god. So obviously it will be very much choppy. So don't try to play or trade in gold or silver. It's very much volatile, and I expect further fall from both the commodities. So in fact Nasdaq also, if you see, just look at this Nasdaq, just look at this chart. I'll show you something now. And now I think everyone will tell like all this Iran, Israel and all the bullshit stories, but just look at this chart and exactly I'll show you something now. Let me take you to that. I don't know where I kept it. Did I really tweeted it out? I don't know. Let me check. Just a minute, give me a minute. I'm just recalling my tweet. Look at this. Okay, look at this. February 13th, correct? February 13th. Let me do candlesticks only. Just to easy purpose. February 13th. So this was the day somewhere I tweeted that. So we have very good, the Nasdaq is trading in very, what you call the danger zone now. Either it has to be like a breakout or breakdown level. Not a breakout, like kind of very. Either it has to bounce from these levels or it has to break down. Close to February 12th, around this zones I tweeted. So look at this now. From here on, I know it's too much volatile. If you see, look at this choppiness. It's like 10% in index. It's too much. Look at this fall. So now whenever whenever it break this level, so you all will start focusing on the macro news like Trump or Iran, Israel. But look at, how did I post it on February 13th itself, it's a line of sand of the US market, just because that's a technicals always is ahead of news. So that's the reason I tell focus on technicals and understand what's the market structure and trade. So now currently US market is correcting very badly, and look at, we got the clear gap resistance of this zone now. So unless this is clearly taken out with the, this act is very very bad resistance for the for long. So unless this gap is cleared, please get out of all the US market holdings. So I'm expecting very again decent correction now. So probably the targets is clearly open now completely. Let's see. So probably it might come, initial target it might come somewhere close to 22,000 and then close to 21,000. Let's see. But again, this has very strong resistance. Look at this. Look at this gap and just check the respect to Nifty now. Look at this. It's currently something like this, right? So obviously we have plenty more left. Lot of room left towards the bottom now. So this is the overall of market context. So see you in midweek. Thank you very much.